Bulls back in charge as Fed flip odds surge, markets on fire. Market briefing, market analysis and financial news. Market analysis, December 22, 2023. Good morning everyone and thank you for choosing our market briefing. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Asian markets are poised to open higher following Wall Street's rally, as economic data continues fueling expectations of Fed policy easing in 2024. U.S. index futures trade flat after the S&P 500's 1% gain, putting it on pace for an 8-week winning streak. Driving optimism are the latest GDP and consumption figures underscoring a cooling U.S. economy. Q3 GDP saw a downward revision to a 4.9% annualized pace, while consumption missed projections. As Chris Larkin of Morgan Stanley stated, the data aligns with narratives of coming Fed cuts to support markets' recent surge. Indeed, swaps traders are now pricing in around 150 basis points in 2024 cuts, double the Fed's guidance. Key inflation data due today is expected to show the Fed's 2% target being met. This may promote further dialing back of rate hike bets. In corporate news, Nike shares sank over 10% post-market as its revenue outlook disappointed. The company outlined up to $450 million in restructuring charges related to job cuts. Oil retreated following gains this week, as surging U.S. production eased supply threats from Houthi unrest near shipping lanes. Traders are also eyeing China's halting of rare earth material exports to the U.S. amid ongoing strategic tensions. Major currencies remain largely flat after the dollar index dipped 0.6% Thursday. Australian and New Zealand bonds edged slightly lower following stable Treasury performance. Other data ahead includes UK GDP and inflation, Japan CPI, Malaysia CPI, US new home sales and consumer sentiment. But many see minimal market moving potential during the year-end liquidity drought. As Ian Lincoln of BMO Capital stated, consolidation remains the most relevant impulse for a market quickly approaching year-end. Next week's price action will be largely irrelevant with limited liquidity and conviction. With the data upholding easing narratives, traders await the Fed's preferred PCE inflation gauge today. But momentum still favors a Santa rally through year-end, with risk appetite holding up. Key downside threats include potential for a hawkish Fed pivot, while upside drivers include any bullish guidance adjustments or supportive policy shifts in 2023. But medium-term trends point to plateauing rates and steady growth amid slowing inflation. Financial markets saw continued volatility this week as major currencies and indices reacted to the latest economic data and central bank policies. The US dollar index fell to its lowest level since August, dipping below 102 as the dollar came under selling pressure. Driving the dollar's decline was a downward revision in US Q3 GDP growth and gains in Wall Street indices, which reduced demand for the safe haven currency. The dollar index now consolidates losses below 102 ahead of the release of November's PCE inflation data, new home sales, and consumer confidence figures today. Over the week, the dollar saw losses of -1.6% against the Swiss franc, -1.19% against the Australian dollar, and -1.13% against the New Zealand dollar. The heat map shows major cross-currency percentage changes, illustrating the dollar's widespread weakening. Meanwhile, in the UK, November retail sales exceeded expectations, rising 1.3% month-over-month after October's flat reading. However, Q3 GDP growth saw a downward revision to 0.3% from 0.6%. The mixed data led to slight gains in pound sterling to US dollar, now stabilizing around 1.27. Euro to US dollar also gained ground this week, closing higher on Thursday on dollar weakness and consolidating near 1.10 early Friday. Losses for the dollar-yen pair accelerated yesterday with US dollar to Japanese yen dropping over 100 pips and currently consolidating below 142.50. This move lower came despite Japan's national CPI for November declining as expected to 2.8% annually. The Bank of Japan minutes also reiterated commitment to maintaining easy monetary policy. Finally, Gold prices were buoyed by retreating Treasury yields and dollar softness, with gold ounce per US dollar registering modest gains and holding at around $2,050 per ounce early Friday. The dollar slide reflects market expectations of a potential pause in Fed rate hikes, while traders await further data for direction. Key events ahead include earnings from Nike and Micron next week. The ECB also aims to continue shrinking its balance sheet in 2023 while avoiding broad policy tightening. Key events this week: Japan inflation, Friday. UK GDP, Friday. US personal income and spending, new home sales, durable goods, University of Michigan Consumer Sentiment Index, Friday. Some of the main moves in markets. Stocks. S&P 500 futures were little changed as of 8:14 a.m. Tokyo time. Nasdaq 100 futures were little changed. Nikkei 225 futures rose 0.3%. Hang Seng futures rose 0.4%. Australia's S&P/ASX 200 was little changed. Currencies. The Bloomberg Dollar Spot Index fell 0.6%. The euro was little changed at $1.1008. The Japanese yen was little changed at 142.11 per dollar. The offshore yuan was little changed at 7.1423 per dollar. Cryptocurrencies. Bitcoin fell 0.2% to $43,924.82. Ether fell 0.2% to $2,244.68. Bonds. The yield on 10-year treasuries advanced 4 basis points to 3.89%. Japan's 10-year yield advanced 3 basis points to 0.585%. Australia's 10-year yield advanced 2 basis points to 4.04%. Commodities. West Texas Intermediate crude was little changed. Spot gold rose 0.1% to $2,048.87 an ounce. In conclusion, we'd like to thank you for watching Market Briefing, market analysis, and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.